Hey traders, today I want to talk to you about stock market cycles. There are cycles that each particular trade goes through, and it's very important to monitor this and understand where you are in the cycle so that you make sure you time your entries and your exits correctly for maximum profit. Now, why do we want to monitor this? Well, we really want to follow where the smart money is. Smart money is what dictates and drives the price action in the marketplace. So, what is smart money? Well, stock market or Wall Street refers to smart money really as institutional banks, hedge funds, proprietary firms that house and hire professional traders, billionaires, millionaires, investors, as well as investor associations and investment groups, also algorithms and high frequency trading computers that really dominate 80% of the market moves on any given day. About 20% of the market action, if you will, or the price action that contributes to this volatility involves small funds or investors, retail traders, what Wall Street likes to call as dumb money, right? So about 80% of the market is being moved by the smart money. So we want to follow their actions and kind of ride those waves that they create so that we can create those profits. So Investopedia calls smart money really the capital that is being controlled by institutional investors, market mavens, central banks, funds, and other professional financial professionals. So it also indicates that it's really that smart money is the force that influences and moves the financial markets, right? And it's also that the smart money is really invested on a much larger scale than the retail investments, as I indicated, about 80% of the market movements. So the market cycle, really, there's four stages. We have an accumulation phase. Okay, this is the phase where you see on the far left here of your screen, where price action tends to range between an established support and an established resistance. This is where the smart money is accumulating the shares. They will go as far as move the price up and down within a range, just to scare off small time retail and dumb money investors. So that when they start to mark up the price, which is the next phase, that is when you can really get in to try to get some maximum profit. As you move up, there is a little bit of a stall at some point where they call the reaccumulation, where there's a little bit of selling going on, but there's some continuation patterns that will continue to drive it up all the way up to the third phase, which is the distribution phase. This is where you get buyer exhaustion, and really smart money is looking to unload their shares. This is also when the public starts to get interested, and by then, of course, it's too late. So they will, smart money will continue to unload shares in smaller increments before you have what is called a liquidation or a markdown phase, with another kind of redistribution stall before the final drop. This will drop into another accumulation phase, and the market repeats itself. Put it this way, guys, Wall Street is one big pump and dump, okay? So let's take a look at some examples. Well, let's look at one example at least. Here is ACST, Acasti Pharmaceutical. It's a pharmaceutical company based in Canada. And as you can see, as I outlined here in the far left with the two blue lines, you'll see the accumulation phase that's been going on really April, May, June, July of 2019. So we have an established support line with an established resistance line. And what you'll see here is a break out of this range right here on higher volume, establishing a new trend. And this new trend creates this markup phase. And as you can see from the previous chart, we had a redistribution phase right here, where there was a little bit of a stall, some selling action going on before the next leg up. Now you can go see into this distribution phase right here, another range that's created, And actually, this created a double top here and here. The double top formation is a bearish pattern before the ultimate demise and decline of this particular stock. As you can see today, there was a green bar. We're looking at a daily chart here. And this green bar likely is going to start another accumulation phase. So here's another image from FinViz, which is a financial website, just kind of showing that in a consolidated manner. And just to keep in mind, look, you have an accumulation, a markup, a distribution, and a markdown phase. These are the stock market cycles. You want to be monitoring this on a daily chart pattern. Weekly is okay, but really, whatever you're looking at, you want to keep it consistent so you can start to recognize patterns. And just keep in mind that when you're planning your entries and your exits, you really want to keep this market cycle ideology in mind. This is how smart money operates, and if you want to become a better trader, it behooves you to understand where smart money is moving and how you can capitalize on those investments. Thank you, everybody. Until next time.